Okay, mortgage defaults. Mortgage defaults. When people cannot pay their mortgage, they've lost their jobs, whatever misfortune has happened, they cannot pay their mortgage, and that's a default. After 90 days of missed payments, it's an official default with the bank. Most banks will have to take immediate legal action, which will lead to a power of sale action and eventually eviction, unless somehow this process can be saved. Okay. That's what a default is. Now, what does mortgage default mean to Canadians? Okay, here's what it means. It means that prices could be impacted downwards. It will create bigger necessity for banks to set aside money to pay for bad loans. Absolutely true. It will definitely be worse than it's been in the last few years. I mean, this will be worse than COVID, worse than anything we have seen is going to be coming up. But really important to understand this. Very important. It's not our banks are not going to be in trouble. It's not going to be an unmanageable societal degradation. It's not going to be like the United States in 2008 and 2009. I was just watching The Big Short last night. I don't know if anybody watched that movie, but I love that movie. I've watched it many times. It talks about the complete and utter collapse of the U.S. mortgage market in 2008. And following that, about 6 million Americans lost their homes. Yeah, there was no government bailout for the banks. No government bailout for the citizens. 6 million lost their homes. That would be the equivalent of 600,000 people losing their homes in Canada due to the inability to pay their mortgage. That is not going to happen here. And I know there's going to be like 100 comments now. No, you're wrong. There's going to be tons. You're wrong. There's going to be just like that. Maybe worse. No, it's not. Okay. So let me explain why. Because what happened in the United States wasn't necessarily about job losses. It wasn't about job losses. It wasn't about economic contraction. It wasn't necessarily about a recession, although a recession certainly happened afterwards. It was about totally insane mortgage lending practices, like batshit crazy, like absolutely fraudulent, insane garbage. I mean, watch the movie. It'll teach you. Ninja loans, no income, no job, just sign here. Put your income in there. Just write it in. Make sure it's high enough. How many houses you want to buy? I mean, like we can just keep doing this fake job thing, just keep increasing them all the time. But you're going to pay a little higher interest. But and we've got a special product that is incredibly low interest for 9 months. It's like 1.5% for 9 months, so you can afford it. And then it jumps to 6.5%. But don't worry. Your house will go up in value. It will just get you another one of these with the teaser rate. It's called a teaser rate. We'll get you another one of these with the low rate, and it goes up later. And then we'll refinance your house again. It's all good. You can buy another house if you want. You might think I'm exaggerating. I am not exaggerating. It was that kind of batshit, nuts, stupid, literally incomprehensible garbage. And by the way, this was not some secret, tiny little lending institutions, some evildoers, and there were evildoers, trust me. But the mortgages were sold to banks, okay, sold to investment banks, and then recollateralized and repackaged, and then into CDOs and CDO squares and synthetic CDOs. Like, it was the craziest shit in the world. And it bears no resemblance to what's going on in Canada. Canada is a traditional story of overvaluation, a bubble through 12, 13 years of super low interest rates. Then the penultimate moment of COVID, when interest went even lower than the low interest rates for all those years. We even went lower still. And you'd get a fixed mortgage rate for 1.69 for 5 years. That's nuts, folks. That's below inflation, well below inflation. It was crazy. It's literally, the money's free, okay, if the interest rate's that low. So this catastrophic bubble in real estate, and now it's all coming back to earth, okay? But it's not going to be like the United States in 2008. It's going to be bad. Like right now, Default rates they're small. They're still very small. They're like 23, 24 basis points, which is like 0.25% of all the mortgages. It'll probably climb to at least 35 basis points, and probably soon, which is still less than a half. It probably will get to a half. If the recession is bad enough, it'll get to 50 basis points, which banks hate. Like, they got to reserve more money for losses, and there'll be real losses because property values may have come down, and they may not, when they sell the house after eviction, they may not get all their money back that they were expecting. So yeah, it could be bad, but it's not going to be 1% default. It's not going to be 1.5%. It's not going to be 2%. Like, at some points in the United States, it was nearly 5% default. Yeah, crazy. Absolutely nuts. Okay. So not going to have that here because we didn't do those loans. We never did loans. We never did. Oh, Ron, you talk about mortgage fraud all the time. There's lots of people putting in for fake income. Yeah, they put in for fake income, but there was 7 people living in the house, huge multi-generational family, and they found ways to make the payments. They'd rather, we've proven it many times, they'd rather drink rainwater and eat grass before they would not pay a mortgage payment. And it was a lot of kind of low income jobs. It wasn't like some super big income job. So look, different. It is different in Canada. It was different in Canada. It continues to be different in Canada. We don't write those kind of loans, and we haven't written those kind of loans where it's like a freebie for fake income. Yeah, just write the income in the bottom page. Just pick your number. Yeah, we don't verify anyway. We don't call anybody. We don't know. Nobody knows. No proof. Yeah, insane. So it blew the whole thing up. That doesn't happen here. That's never happened here. But the bubble is big. The recession is here. I believe the recession is here, and there will be more unemployment, and people will not be able to pay. So the default rate will increase substantially. Could it be double from today? 100% could be double. A little bit more, maybe. It's absolutely survivable. It will impact only on the profitability of the big banks. It will not impact on their ability to continue doing business. It'll continue. So what's the information for you as a mortgage person, as a mortgage holder, if you have a mortgage? If things go wrong, tell your bank immediately. Consider how to deal with it quickly. Don't hide from anything. I know that's emotionally very hard to do. Very hard to do. Our house means so much to all of us, but you just have to figure, I need a way out of this. If I got to move, I got to move. Sell now because, there's some value left now. We don't know if there's going to be some value left next year. So sell now, be intelligent, be honest, be upfront. But there will be more defaults. Defaults will grow. Bet your ass.